Hey guys, Rajiv here from financialhubindia. So today is our first day for the foundation course. We are doing a live course in 2018 and this is the start of the day. Now, our first topic in foundation course is drawing candlestick momentum on your charts. This is a very basic fundamental topic you need to know basically. Now, whenever you open up a chart, obviously you will see candles like this, moving up and down. So you need to figure out basically what the candles are expressing with their momentum when they are going up and down, what they are really trying to tell you. Because overall, if you see, it looks like something is just zigzagging all over the chart, isn't it? So we need to find a process where we can give this momentums a direction, a particular direction. All right. So that's the purpose why we will learn how to draw the candlestick momentum today, and eventually learning candlestick momentum will lead us to our next topic, which is finding a direction, finding a trend direction or a flat market direction. Finding a direction in the sense what really is going on in the market. The market can move in three ways, right? Either it will go up, down, or it will go to flat market. All right, it will go sideways, to go neither going up or nor going down. All right, but to reach in that stage properly, we need to complete this step at first, where we can really understand how the candlestick momentum is really happening on the chart. And then once we understand those candlestick momentum on the charts, then it's very much easy for us to give us a direction to all these candlestick momentums on the chart. All right, so in the candlestick momentum topic, we have four things to notice. There are four rules, actually. Four things in the sense there are four rules you just need to remember. First rule is, whenever you see a candle, this is our first candle, for example, and whenever you see the next candle break the previous candle's high, this way, just the high, previous candle's high, all right? So in that case, we'll have to draw a line with the first candle low up to the second candle's high. Like this, just draw the line like this. So what does it really mean in terms of price action? It means that, okay, yesterday the price reached a high of, let's say, 500 here, and today the price reached a high of 550 here. So in a normal sense, well, what it looks like, the stock is moving up, isn't it? Since the high was yesterday 550 and today 600, the momentum of the stock is towards upside. All right, now that should not be the case all the time, because sometimes it make a high above the previous day and then it comes back below the previous day high and all those things, but I don't want to make right now it's not time to make things complicated. Right now I just need to take you and sit on the board first. All right, and then once we sail with the boat, then we'll explore the nature, then there are things will come in, and I'll be guiding you in those factors. So right now, as a beginner in price action or in the technical charts, just take it whatever I'm giving you. All right, and don't go in depth study of this right now, because this is just a foundation course. And once we start the advanced course, then things will be much clearer for you guys. All right, now. So the first category we talked about, whenever you see the second candle breaks the first candle's high, then the first candle's low and second candle high, you will draw a line up. So as I told you, we are learning what? Candlestick momentum. Like this two candle, what kind of momentum it's giving us. That's the summary we'll have to figure out on the chart. All right, and then step two means the formula 2. The category 2 is whenever you see the next candle breaks the previous candle's low here, then you're supposed to do the opposite. Take the previous candle's high and add it up with the current candle's low, this way. All right, sounds does it make sense? Because the way we analyzed this thing towards upside, the same way we can analyze this thing towards downside, isn't it? Yesterday it went up to 650, but today what happened? I mean, yesterday it went up to 550 from 500. All right, that's why we said, okay, the thing is going up. But today what happened? The low is broken. I mean, yesterday the low was, let's say, 400, but today it made a lower low, let's say 350. So it sounds bad, isn't it? Things are, the stock is going down. All right, so we are putting a line towards downside. That's it, nothing complicated in here. So what if the next candle is again breaking the previous candle's low? This one. What does it communicate with you in terms of price action? Things are good or bad? Things are bad. So you just keep on keep drawing this line, connecting the lows again here. All right. So with the lines, what we are really trying to do, hopefully you're getting it now. We are trying to give a direction of a line with the candlestick momentum, whether it's going up or down. All right. And let's say we'll explore some more. Next candle also break previous candle's low. So again, what? Things are not really good, bad. So the line continues. Okay. And then next candle breaks what? The high now. Now things are good or bad? Things are good now because it has broken the previous day high and now it's shooting up. That looks like, okay, for last 4 days, we are breaking the lows. The sellers in the market are really aggressive. See, in the market, you either have a buyer or you have seller. That's how the market is built, right? So here we had the buying pressure. Here we are getting the selling pressure. But now the price is above the previous day high. Then looks like the buyers are now thinking aggressively, and they are ready to pay. They are ready to pay a higher price what they paid yesterday, which is the high in here. And today the high made is more than that than previous day. If yesterday the high was 500, today the high is 600. It means the buyers are feeling more comfortable now to pay a higher price. So how the direction should be drawn? If we want to express these two candles from here, how we did here in one, whenever we are drawing the line towards the upside, we are attaching the last candle's low to the next candle's high, isn't it? So this is a last candle low, and this is a next candle high. Since the high is broken, so we are drawing the line towards upside. So is it making sense, guys? Is this giving you a direction with the candlestick? Now, if I just remove the candlestick and I just give you these lines, still you can tell, right, what's going on in the market without seeing the candlestick as well. All right. Don't make a mistake to say this as a line chart, because line chart is built on a closing basis. There is a particular theme of chartings called line chart. All right. So people who already know the market, they may get confused. So it's not like that. It's a different thing we're doing. So basically highs and lows you're taking here. Now, what if next day, again, we make a high, we break the previous day high, and this is the candle we get. So things are still good because the previous day high is broken. So this line continues the way when the lows were getting broken, this line was continuing attaching the lows, isn't it? The same way we are attaching the highs. That's it. Then you go, let's say we have one more day breaking the previous day high. Then things are still good. Okay, we are going fine. All right. So hopefully 1 and 2 is clear to you. Now, what if I give you a candle like this where it doesn't break the high and the low as well? Now, what is the direction? There is no direction, isn't it? Either the direction is always clear. Remember this. When either the high is broken, previous day high, or the previous day low is broken, then only we can sense some kind of direction. Because in that point only we can say, okay, now whatever the last price buyers paid yesterday, now they are feeling more comfortable to pay more than that, and that's why the price is rising up. The more demand is coming in, people are more interested to buy, right? So that's how it works. And towards downside, the same thing. When the price is when today's market doesn't break the previous day market's low, it shows that the buyers are still holding. no, and the sellers are still confused, or the sellers are really not selling and not trying to sell the market below the yesterday market price. They are not feeling more comfortable, right? So whenever you see a candle, a day's market doesn't break the previous day's high and low, that's called an insider candle. That's just a term. So if you don't remember, that's all right. Just understand the logic behind it. So somehow this is a confused market. So whenever it's a confused market, for now, just ignore that market, ignore that day. So this is, we are doing topic 3, 1, 2, and 3, which is insider candle we'll be saying. All right. So now here the market was confused. So you do the cross, we ignore this day. And since this day is not giving us any kind of direction, now we are focusing on the next day. Let's see what happens in the next day. Next day price gives you a candle like this, for example. So we compare this candle with this candle. All right, because we are already ignoring this one. You forget this now. You imagine it's not in here. So you're comparing this one with this one. And again, an insider candle because it forms inside the previous candle, isn't it? Some people say it's a child candle. So anyhow, it just need to be expressed. And the main candle, which is this one, is also known as mother candle. You can say mother candle. All right. So mother candle and child candle looks sounds better. Now next day, now when this day forms and you see, okay, this day's highs and low also inside this day's highs and low, then again, what to do? Ignore it. It's not giving us any clue, any direction. Forget it. Somehow this is a accumulation sign. Basically, this is an advanced level thing we'll be doing when we'll do the advanced thing. But for now, again, just take whatever I'm giving you and focus on that only. Now next day, price goes this way. Now, okay, now we have some kind of direction because now we see that the buyers are really interested to go above this layer now. So we get a direction that, okay, now the previous day high is broken. So we come back to the same rule, what we did in here, the highs are broken, so low to high attachment. Same way. Already we are attaching from low, then high break, we are just attaching the highs. So this is a continuation and we go to here. We touch the high for giving a direction. All right. And then let's say, for example, we form one more inside bar here. So what to do? We'll be ignoring this one. Great. And next day, for example, we form this one. So here what happened? We break the low, the mother candle. This is the main candle. Next to was insider, so we ignored it. And next day, we see that this low is broken. So the same thing. This was a mother. Inside the high was broken. We connected this line because this line was already being built with the highs. So we don't need to touch the low and high here because the low is already from here. From here onwards, from this candle onwards, the high is only broken, right? So the market is going up only. So the line will be going up, touching all the highs. And now what happened? We are on the high and the low is broken. So what to do? We'll have to, since we are on a high and low is broken, we'll have to connect the high and low. Hopefully you're getting the concept, how it's really working out. If you're not getting it, just go back and repeat the thing. You'll get it. Whenever highs are broken, you're just attaching the highs. Whenever lows are broken, you're just attaching the lows. All right. Now, next day, let's say we got one more candle here. Then one more candle here. Then one more candle here. Then one more candle here. All right. Now here, since what is going on, the lows are getting broken each day. So we just continue drawing the line, touching the lows. All right. So that's what the summary is. If now I remove all these candles and I just keep these lines, I know what's going on in the market. So in terms of candle, when you see the market, it looks like, okay, a bit, zigzagging and what's going really on. But when you draw these lines on the chart, you get the direction really. I mean, let's say this is a 500 level. From 500 to market falls from 400 up to 400. From 400 it goes up to 600. From 600 it goes up to. So this is how you can summarize the market, isn't it? And in future, definitely will not be drawing these lines anymore in future on our charts. This is just to start with. This is just to start with and giving you an eyesight of really what's this kind of what kind of things these candlesticks are doing. All right, and these lines will be in your eyesight, in your mind, automatically be drawn when you start, when you start trading the market and do some more things on the charts and everything. So hopefully after a week, I think after a week, you don't need those lines to be drawn like this. You can see the market, you can understand things in any way, obviously after practice. Now we did 1, 2, 3. We talked about 4 things, right? There are 4 different things we need to take care when drawing formulas, you can say, when drawing the candlestick momentum. So you all already talked about the 3. Now the 4th is what kind of what is left? What kind of other scenario you can think that can happen? One scenario talked about when the highs are broken, one scenario where the lows are broken, one scenario where highs are lows, nothing is broken. What is left? Where highs and lows both are broken, that's left. So if you get a candle like this, where the previous day high is this, previous day low is this, and both are broken. So in that case, what to do? How to draw the line and what kind of direction it's giving? This gives us a direction of volatility, basically. Volatility. See, when the market is just breaking the lows, and smoothly coming down, this shows you a strength of the selling side, isn't it? And the opposite is true. When the highs are only broken and smoothly moving up, this gives you a sense of, okay, the buyers are really strong enough in the market and going fine. But when the buy and when the previous the high and low both are broken, that shows the volatility. Okay, I think as a beginner I should not use this term. For the beginners, I would be using when the buyers and sellers both are aggressive in the market. In a buying momentum, in this momentum, the buyers are aggressive in the market. In this momentum, the sellers are aggressive in the market. But in this candle, it looks like when the previous high and low, it looks like the sellers tried to push the market down, then the buyers tried to push the market up, then finally someone owned the market. This was not a one-way market. All right, but finally, how to understand that, then which way the price is really going, how to understand those parts in outside of the candle. Because in terms of the lows break, we can understand the sellers are really going on here in the market. But here, as I'm saying that, okay, there are volatility based on buyers and sellers, then who really own the market? So to understand that, who really own the market, we need to go some in-depth thing in terms of the price action scenarios. So right now, again, this is not the right time to tell you those things. That, okay, from here, well, how to understand the price action logic behind it. We can understand those things right now, because right now I can explain you those things, but this is not the right time. This will more confuse you. So I'll just show you a simple trick just to draw the line. Since we are talking about the line and all, so let us focus on the drawings of the line for now, and then gradually, since it's a price action course you are doing, gradually you'll be understanding the price action context, and because it's all about the candlesticks. It's all about the candlestick, price action context on the chart, understanding the candlestick's behavior, understanding the charting behavior on the chart. So in future, you'll have to understand how the candlesticks, I'm not talking about pin bar, I'm not talking about engulfing bar, these for the people who are already in the market and struggling with these things. So please don't take it this way. I'm not talking about those as usual candlestick formations. You go to Google and type candlestick formations. I'm not talking totally about that. I'm talking about purely understanding candlestick formations based on the price action logic on it. Clearly understanding price action structure based on the price action logic on it, all right? So those things will come in. Now, whenever you see there is an outsider candle, this will be seeing outsider candle because it has broken the high and low both, all right? This is just the opposite of an insider candle. When you say it's an insider, when the high and low inside the previous, the high and low. And when you say it's an outsider candle, when the opposite is true, when the current candle will break the previous, the high and low both. All right. Now, whenever you see a outside candle, then you'll have to take a break. You'll have to take a break to continue the line towards downside here. Firstly, I'm not telling you the logic, I'm just telling you the formula directly. And then later on, you'll understand the logic behind it. All right. Now, we have been drawing the lines low, 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 low here. And then whenever you see outside candle, just stop there. So don't connect this candle and the outside candle right now. Right now. Now, that's step one. Don't connect outsider candle and the current candle right now. You'll have to wait. Secondly, you'll have to see what the next candle forms. What is the direction of the next candle? Let's say this is the next candle. All right. Now, when this is the next candle, you'll have to connect outsider candle. I mean, in terms of the next candle, if you compare these two candles, where the lines should be, this one and this one, isn't it? This is the line. So this thing you'll have to complete. So, now, step two is you consider the outsider candle and the next candle, and accordingly you draw some line. Some line in the sense, draw the first line there. Okay, so you have done that. Now, once you have done that, then you will have to fill in the blanks here. Not filling the blanks. So the filling the blanks will go where? Wherever the line ends here, and from wherever the line starts from here. Just draw the gap. This one. Draw the gap. That's how it should be done. Now the opposite is true. How? If I give you the opposite scenario, let me clear this. If I give you a candle in here towards downside, that was a high break, right? Now there's a low break. Then what will happen? Step one, you stop here. You stop on the candle before the outsider candle. Step two, you will have to connect these two since the lows are broken. So starting from outsider candle, you'll have to connect the highs and low. Highs and low. All right. And then you'll have to fill in the blanks. So now the filling the blanks will be like this. So that's your direction. That's your direction. Simple. All right. Now, the logics behind it. Now, to understand the logics behind it, you need to understand basically, you know, the more logics will come in to understand in a better way for drawing these lines. Those will be based on the closing, basically, how the candles are getting closing. So based on those factors, we can better understand these candlestick formations later on. But again, right now I'm not going to talk about those things. Right now you're just going to do this thing only, because we'll be going on a progression basis, a step-by-step basis. So to take you for the next ride, I need to make sure this ride is completed for you. And what is left, there are something which is left here, obviously. But whatever is left here, those will be covered in a progressive method in future. Some will be covered in the advanced, in the foundation itself. Some will be covered once you start the advanced course in there. All right. So the answer is there. You'll be getting those answers with time. Now, let me see. There's things happening on the live market, not live market, I mean on the charts. So once you open a chart, if I start seeing the chart from here, let me just zoom in more. All right. So let me now draw the lines. If I'm taking, this is my first candle where the market starts, for example. So what happens? This is the first candle, next candle, high is broken. So I drop from low to high and I connect it. Sorry. And then what happens? Then this is my next candle. The low is broken. So I'll come from here to the lowest point. Then next candle, high is broken. I come there. Then next candle, low broken. I come from there, high to low. Then next candle, the high is broken, previous candle's high is broken. So I go up, next candle, and then this black candle looks like a what? Insider candle, because this is below, this is inside the previous candle's highs and low. The low can be equal as well. It can be happen that previously it was the low of 500, today also low of 500, but that's all absolutely fine. So in that case also this remains a insider candle. Then so this is insider candle, this is insider candle, this is insider candle. Why? Because these three candles are formed inside this blue candle, one single candle. And then we got this candle which has broken the mother candle, this one. If you remember that mother candle inside where the child is, this three child is there. So this mother candle's low is broken. So this is the low of this candle. So from high to low I come down, right? Then I go up because the high is broken. Then I go down because the low is broken. Then I go up to here because the highs are broken. Inside that candle I ignore this one. The next candle break the mother candle's low, so coming down. And then I go up here. Why up? Because this candle break the previous candle's high. Then you see these are insider because not breaking the previous candle's highs and low. And then the next candle breaks the mother candle's high. And all these candles, this one, this one, this one, this one, up to this candle, all these candles has broken what? The highs of the previous candles. So I can keep continuing drawing the line from here to here. That's the direction. That's how the line should be drawn. Then this is again insider, and I think this has broken this mother candle's high. So we can go up to here, and then low broken, coming down, insider, ignore. Next candle breaks, mother candle's low, coming down here. We go up. All right, so that's how we are supposed to draw it. Now we have done the three methods. So number one method, when the high is broken. So you can remember these terms as well. HH, low, then insider, 3, and then 4 was what? Outsider. Simple. So these 4 pattern. All right. Now I have shown you these 3. Let me show you an outsider, and then we'll stop for the day. Just give me 1 minute. I just check the market because the market is on right now. So it's disconnected. Okay, anyhow, I'll just go in there. So there will be homeworks will be posted in the member section. All right. So in the private Telegram channel, after this one, I'll be giving you the homeworks. So homeworks will be, I'll be giving you 10 different stocks chart, 10 different screenshots I'll be giving you. All right, and then I'll show you how to draw those charts as well and send it to me. All right. So this is the layer. Basically, we are trying to, we are waiting for a pullback in today's market up to this layer for a trade, possible sell trade from this area, but it's not happening yet. Let's see. Okay. All right. Now we in today's market itself, I can show you an outsider. So this is an outsider candle. You see this candle? So this candle has broken. I think this will be more clear, and let me show you here. Yeah. I think there are more. There are so many outsider candles I can show you now here. Let's look at this. I mean, if you just look at from here, we have, let's say market starts from here. You have this first candle, then second candle what? Breaks the previous candle's low. All right. So high to low. This is where we start. And then next candle breaks low again. So we come down. Then these are, let's say these are insider candles. For example, 1, 2, 3, just to make it easy. Insider candles closing before the, sorry, the highs and lows remains below the, inside the previous day. These black candles, high and low. So if I consider these three as insider candle, for example, and then the next candle forms in here, this one, right? So this breaks the mother candle's low. So we go down, and then again this low is broken, then insider you ignore this, then again this low is broken, again insider you ignore this. So all the lows are getting broken only, right? Till here. So from here we can draw a line directly up to here. So now since we already know the things, we don't need to now attach the lows. So we don't need that. Once you see, okay, from here to here the lows are only broken, you can directly draw a straight line. It's not compulsory, because some people are there who are just attaching the charts and sending it to me. So the chart goes like this, then so it's very much irritating. You don't need that. We just need to get a direction of the line of the market, right? And then from here you see there's an insider, so you ignore it. Then the next candle breaks the high. So this is the top. Okay, we go up. Then the highs are broken, sorry, lows are broken, we come down. And then highs are broken. We come here. Now you need to stop. Why? Because now the next candle is insider here. Now since the next candle is insider, so we need to, the step one was what? We need to stop on the current candle, and you need to, second was you need to start with the outsider candle. So the outsider candle, and then you look for the next candle, breaks the what? Breaks the outsider's low. So from here to here. All right. Third step is filling the blanks, fill the gap. So there's the gap here, fill the gap. You get the direction now. Then the low is broken again here, then insider and blah, 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 those things, the same thing. All right, the same thing happens here. So it goes up. Let's say we'll start drawing it from here. This is the first candle, next candle is insider, then next candle. So from low to high, we need to draw, right? Then we ignore these two again, as these are insider. But then we need to stop. Step one, stop. Stop two, start drawing from the outsider high or low, whatever, based on the next candle. So since this is outsider candle, why? Because it breaks the previous high and low. And then the next candle is breaking this outsider candle's low. So this line will go down, right? And the same thing, because since the lows are being broken, so you need to draw the line actually towards downside. From here, market starts falling down. Now the gap should be filled here, so fill the gap. That's how it is. All right. So you're done with the topic today. And tomorrow we have Q&A sessions where any kind of queries or doubts you guys have. This is not for the people who are seeing the recordings and didn't join the course. This is for the people who are in the course, basically. All right. Tomorrow's session, the Q&A sessions. So we'll start around 3 o'clock. All right. And the timing will be updated in the Telegram channel. And you can come and you can ask me any kind of queries or doubts you have, or you want to repeat one particular topic, or you didn't understand something. You can ask me those things since you're doing the live course. All right. And the live course is conducted once in a year, only once in a year. And this is a part of this is a foundation course of this live course. Hopefully you will be starting the advanced course from 8th of July. And the advanced course will not be shared free in the YouTube. This advanced course will be only exclusively for the advanced course members, and won't be posted in the YouTube for free. So since from 8th of July we are starting the advanced course, and these foundation courses are given for free in the YouTube. So if you feel like you are okay with it, these foundation courses, and you are very much comfortable with the chartings and things in here, then you can come in and join the advanced course from the 8th July as well. Now, here, let me show you how you'll be completing the homework. Let's say I give you this one as a homework. Now, how I'll give you this one as a homework, I'll take a screenshot in here. No, I think most of you are having this clip2net.com as a screen capture software, right? So let me show it in that thing. Where is that? Okay, so you will be using four different colors. No, we don't need that. So here in one chart, I'll be saying here, just show me high, high, and low, low. Only you will have to show me high, high, low, low. So then you just draw the lines for high, high, low, low. Let's say from here, market has broken the low, 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 then low, low up to here. So from here, I draw the line up to here. And then here the high, high is there. So put the high, high. All right, and then you send. I mean, if the project is show me only high, high, and low, low, only this way you'll be marking it. You will not be marking insider and everything. You won't be. Now, if the task is show me insider candles, then you will take this box and you will show me like this. Okay, this is insider. Just mark it like this. Then these are insider candles. Mark it like this. Okay. Then if I tell you to show me the outsider candles, then you'll be marking this one like this, because then this is outsider as well, right? And this is, now why two candles? Because you'll have to show this candle is outsider for which candle? This one, right? Now, first 3 to 4 charts will be like this only, and then at least 3 to 4 charts I'll be giving you where you will be drawing all the 4 principles in the whole chart. All right, so you will be drawing lines based on high, high, low, low, insider as well as outsider as well, that way. And also there will be projects based on only the outsiders. Just show me some drawings. I could say show me some drawings only in this area. Forget about the other areas. Now, when I say that, it means I want to really see how you're drawing the lines with the outsider bars there. All right. Okay, so I'll see you guys on the next topic, which is trend momentum. Now we have done the candlestick momentum. Now then we'll do trend momentum. So there, what we'll do is that we'll put all these candlestick momentum lines in a perspective, in a particular direction, to find a trend or find a direction in the market. All right, and for the advanced courses are starting from 8th of July. So if you're interested, then the link is already given in the description. You can come in there and you can join the you can see the details over there for the joining. That's it from this thing, and I'll see you guys then on tomorrow's Q&A sessions. All right.